Bruce is in Qualicum Beach, BC. Hi, Bruce.
Hi.
Hi, what's your question today?
I was wondering if you think that this is a good entry point for Gilead Sciences. There seems to be some of the people seem to be thinking it's a considerable upside to this stock. So I'm going to hang up and listen to your answer.
Thanks, Bruce. This is one you've talked about before and recommended.
It is. So, Bruce, first of all year long, the biotech sector has been one of the best performing sectors. In fact, step back, healthcare for the last 2 years has been about the best performing sector. Within healthcare, you've got pharma, which is acting really well, and there's a bunch of great names in that group. You've got biotech, which has a higher growth rate, but trades at similar multiples to the pharma stocks. You've got the hospital supply companies, you've got the hospital management companies, you've got the device companies. The whole area is one that I think you should be taking a look at. Gilead is an interesting company because it has multiple products. There are lots of catalysts coming over the next 18 months on additional uses of existing drugs and new drugs. Stocks based out sort of between $110 and $100 over the last 3 months. We're seeing a real bid in the biotech stocks in the last 3 days. So we always look for, when markets rally off lows or recent lows, where does the money go? And biotech is one of the big winners in this group. So Gilead, I think, is a great company. I don't think it's a one-product wonder. It really has a well-diversified product portfolio and trades at a reasonable multiple given its growth rate. I think Gilead looks good. I think Alexion looks good, ALXN. I think Biogenetic, BIIB, looks good. You might even pick, a basket of 2 or 3 of them just to take a little bit of risk out. But I certainly have no problem investing in this space.
Thanks, Bruce. Here's a Rudolph, appropriate name for the season. Hi, Rudolph in Toronto. Go ahead.
Yes, thanks for taking my call. I was just wondering about Methanex, MX. All you hear from those people now for weeks and weeks, we have no power supply somewhere in the Caribbean where they got a place or not, but I don't know.
Right.
Is it worthwhile to keep them or buy them or maybe dump them and see if they have a power supply, then maybe buy it back?
Right. What do you think of Methanex?
Okay, so Rudolph, look, here's the way I would put this. If you're in a decent market and you own stocks that are not participating or have near-term storm clouds, maybe move on, right? Because there are lots of stocks doing really well. Even in the chemical space, there's some that are doing quite well. But Methanex is running into some operational troubles. I think that I would move on and look at something else right now.
Are you, and what do you base that on? Natural gas, or what else is the thinking there?
Well, they are, first of all, from a sector perspective, if you look at a lot of the chemical stocks, they've really come off over the last few weeks. And just like in the energy space, they are, for whatever reason, being lumped in with some of the energy names. And with basic materials and so on. If there is concern about a little bit weaker global demand and some pricing weakness, there's a reason why these things are selling off. Now, they've had some operational difficulties. I just think that you don't need to have something in the portfolio where when you're getting some very strong market performance and you're not participating, I just think you have to move on. Technically, I think the stock looks broken.
All right, fair enough. Alistair's in Courtney, BC. Go ahead.
Good morning, Mark. I'd like David's opinion on Vermilion Energy. I sold it this summer in the low 70s. It paid a nice dividend, but I'm just wondering if now might be a time to get back into it. Thank you.
Look, Alistair, this is the way you have to look at it. You're trying to pick a bottom here, and maybe you'll get it. But I just have to say, I don't think the outlook for this sector is nearly as good as it was even 6 months ago. And I think that there are going to be question marks for a while. I do think energy prices are going to remain weak for some time. We are in a different world today than we were with $100 oil. You shouldn't expect it to bounce back to $100. So in the meantime, there are good and bad. Vermilion's a great company. But the question is, do they have the same kind of tailwind they did? And they don't. So I just would caution everybody about trying to go back and buy what was working and hope that it's going to go back. I've seen that happen so many times when a sector's been a leader for a long time, it's gone through some weakness. It doesn't mean that it has to come back. And I would just wait put a little water pass under the bridge, maybe take a look at some other sectors that actually do have a tailwind.
In Saskatoon, we have Bev on the line. Hello, Bev.
Hello. Thanks, Mark, for taking the call.
You're welcome.
Season's greetings to everybody.
You too.
David, I bought a bunch of U.S. dollars back when it was about $1.04, $1.05.
Good for you.
Yeah, so it's done well. So I don't know what I should do now, whether I should bring it home or whether I should wait for, maybe some more depreciation in the dollar, or if I should maybe invest it in the U.S. And if I did, I was thinking possibly the tech sector, but, I'm certainly open.
Okay.
Thank you.
Okay, so Bev, you had a whole bunch of questions there, but let me start with the first one, which is currency. Canadian dollar is certainly backed off versus the U.S. dollar. I think another way to look at it is it has not rallied as quickly as the U.S. dollar against the rest of the world's currencies. Canadian dollar is one of the stronger currencies on earth over the last year. It certainly is weaker versus the dollar, but it's just because the U.S. dollar is so strong. And what I'd encourage you to take a look at is if you look at how the U.S. dollar did in the 80s and 90s in a bull market, the U.S. dollar steadily appreciated against all of the world's currencies, like for 16, 17 years. And ultimately, when the U.S. market rolled over in 2000, U.S. dollars started to sell off versus world currencies because people were selling dollars to buy emerging markets to take money into other asset classes. So we're now about 2.5 years into a bull market in the U.S. U.S. dollar has been appreciating versus Canada and other currencies, euros and yen. But I think it's the beginning. And I think this is going to go on for many years. It's hard to see how we're going to get significant growth out of Japan or significant growth out of the euro area. Certainly not in the near term. Canadian dollar, if resources remain relatively weak versus other assets like U.S. stocks, will probably continue to languish relative to the U.S. dollar. So I would keep the U.S. dollars. I would look at buying U.S. equities. I would look at buying U.S. dividend growth because I think that's the most logical place that baby boomers are going to invest their money. There's lots of companies you can buy that will give you between 10 and 15% dividend growth a year for the next 5 years. We'll talk about a couple today. But you could even buy the S&P 500 and probably do very well both in dollar terms and even better in Canadian dollar terms than bringing it home.
And is the stronger U.S. dollar for multiple years, is that a big theme of yours?
We think it's likely that the U.S. dollar strengthens continually over the next foreseeable future. We think we're in a secular bull market in consumer-led, especially U.S. economy. And what's happening right now correlates very strongly to the kind of environment where dollar should continue to rally.
All right, David, a break here and more questions on the other side. Stay tuned.